Hi guys, and welcome to this week's mentorship video. Right, so you'd have seen that I skipped last week. I did not release the mentorship video because the same bias, the same forecast that I gave you guys 2 weeks ago was still in play. Right, so it was just a case of following through with that forecast. Now I'm going to do probably the next 3 to 4 weeks, let's just say the whole of March forecast, where I expect price to trade to, or the targets that I'll be looking at, and in which direction I'm going to be looking to trade the dollar index. Now, with that said, pretty sure by now you should all know that we are heading for a lower dollar, right? So far, our short to medium term directional bias on dollar is to the downside, right? We anticipating dollar to move lower, heading towards most probably the 105 levels, and if the weakness continues, second and third quarter, we're likely to see 103, 102 by the end of the year, right? So I had my targets from 2 weeks back, entries at 108, and then targeting 106,920. So definitely that's a 107 price point, which is a whole number, right? But looking ahead now into March, so this is February, that's how February is closed, guys, and you can see we have traded below the lows of January, and price did find what support, and it has pushed to the upside, right? So if we go on a lower time frame, if we dig deeper onto lower time frames, say the weekly and the daily time frames, we are likely to see most probably discount areas there that have provided what support, and mainly inside this bullish candle from December, we are likely to see discount areas that have provided support. So yeah, heading into March, I'm still bearish on dollar. Therefore, we're talking of say 105.45. That's for extreme weakness. The first target is going to be 105.45, or we can talk of the low of December. The low of December coming in at 105.42. Those are like the early targets for March, as in most probably in the next 2 or 3 weeks we should see price make moves going towards those price points. Now ultimately, we've got these imbalances here between December and October. We have imbalance, and then we have imbalance between November and last September 2024. So those are ultimately our draw on liquidity on the monthly chart. Those are the draw on liquidity, and you can see where price is at the moment. We're just trading away from a monthly imbalance which was filled in January. Thereby we've seen price finding resistance and pushing to the downside, right? So that's the forecast on dollar index from a monthly point of view. I'm anticipating further moves to the downside, but March could retrace. You see the bulls that we have seen end of February, the bulls that have pushed price end of February, we could see them push back into this premium area here before a move to the downside. So yeah, let's dig deeper and see how we should approach this market heading into the coming week, the week after, and ultimately into end of March. So looking at the weekly chart, now take note, the big gray shaded area, that's our monthly fair value. right? That's our monthly fair value. That's our monthly fair value, where price seems to be finding, not seems, where price is finding resistance and pushing to the downside. So the first week of January we had a run of stop. You see, this is basic now market structure reading. You see, we had a run of stop above this week here. The first week of January, Monday 6th of Jan, the high was traded through during the week of September, during the week of 13th January. You see, we traded through, closed below, and then we had a push to the downside, right? Then we had redistribution here into fair value, then price pushed further to the downside. Now look at this candle here, 1, right, and 2. In bearish markets, right, in bearish markets, those candles are definitely going to provide what? Resistance, right? Those are up close candles in bearish markets. We don't expect to see, say, the following week go all the way towards, say, 109, right? If it does break through above this green, this bullish candle here, then we could see a short-term retracement to this daily bearish order block, but we're going to talk about it once we go to the daily chart, right? So those two green candles, take note of them. Potential, especially the current, the week that just ended. That's redistribution, most probably in fair value on the daily chart. We're going to go into this candle. You can see this candle here broke below these two old lows, closed below, redistribution, price pushes. We have another redistribution into this up close candle. You see this candle here traded into this bullish candle, and then price pushed lower. And the current week that just ended, price closed inside the green candle, where we anticipated to find what? Resistance before it pushes to the downside. Now take note of 105. 105 is coming here. That's where 105 price point is. If I'm to go to the daily chart, right, the 105 is right here. You see, that's our 105 area. There's a gap in between there. There's imbalance below 105.43. You see, below 105.43. But if we are to dissect now, if we are to look closer on this daily chart, we've got imbalance here which just got filled. You see, there's a gap, fair value gap, inefficiency, and then we extend that, right? So much is crucial. Much opening is going to be crucial in terms of where price is going to head, say during the first week of March, and expect probably opening gaps, whether to the upside or to the downside. I'm not pretty sure, right? We just have to see and to wait and see when the market opens, right? So this imbalance here, price feels it. You see, we had a redistribution there into fair value, and ultimately we've got our bearish order block there on the daily chart. See, that's a bearish order block. You see, so it becomes easy, guys. It becomes very easy in terms of your analysis. If you follow through with each and every analysis that you do, it becomes easy, because you'd have done, say, your homework previously. So following through becomes an easy task, right? Following through becomes an easy task. So now, with that daily bearish order block and the daily fair value gap, right, we've got higher time frame premium areas that are likely to give us resistance and provide sellers with an opportunity to trade lower, targeting 106.13. I'm pretty sure that's February low, 106, right there, 106.055. that's February low, which is like the weekly low right there. Right, so that would be a target in terms of short-term trades. If you're doing your swing positions, we're talking of 105, 105.45, right? So we're talking of this as a target, say on your day trades or on your short-term trades. So we're talking of 106.13, and those are the trades that you would have taken, say from current price level, right? Which I don't usually advise. Wait for the next candle to open, because there's momentum here. But also remember, in terms of strength, in terms of market strength, 3 consecutive daily candles. If you are day trading, don't take longs. Chances are very high we're going to have a down day, and that down day is going to be from premium. If price keeps pushing to the upside, right? If it pushes to the upside, then you are potentially waiting for 108.22. That's your optimum entry, right? You can also take it at 108 as an ideal area for you to sell, right? But it might be an early entry, right? So we definitely need to see some signs of resistance, especially on the lower time frame, for us now to target 106 short term, probably for next week, because this imbalance here, price is going to try to fill it up, right? Prices IPDA will try to rebalance that inefficiency, right? So when you go to H4, our entry time frame, right, this is where things become interesting now, guys. Bearish order block right there, you see, that's a H4 bearish order block number 1, H4 bearish order block number 2. You see, becomes pretty straightforward in terms of your price action. I'm not going to mark this H4 bearish order block. Take note of them. Look at the emphasis that price had the last 8 hours on a Friday to close the daily fair value gap. Look at the impulsiveness of price, the way it was enticing people to go to the upside. I'm pretty sure that was during that Trump and Zelensky meeting or something like that. That's when we had that huge push. But yeah, I presume the tariffs also that were placed on euro gave a bit of relief to dollar. That is, I think, Wednesday or Thursday. That's why we saw a bit of relief on dollar index. But ultimately, looking at this structure, we're looking at a market which is trading to the downside. So next week, your target has to be 106.13, and ultimately you have 105, 106. You have 105.45 as a short-term to intermediate target for dollar index. Now, supporting evidence, when you're looking at other intermarket analysis, when you're looking at other assets to support say the bearishness that we are seeing in dollar, right? So I'm going to go to the interest rates triads, starting with the 5-year, right? Then I'm going to go to the daily. Look at the daily chart for the 5-year treasury yields. Massively bearish, you see, that's massively bearish, you see, on the 5-year treasury yields. And then on the 10-year treasury yields, massively bearish. On the 30-year yields, massively bearish. Then you ask yourself, the rally in dollar, is it going to be sustained or not? As a well-informed trader, right, you should know that on negative news for DXY, for the US dollar, for the US economy, right, we go to the calendar, say next week. What I am on next week, right? On negative news for US dollar, while we are trading in premium, ideal area for you to what? To short. So for example, Monday 1700 hours, 5 p.m. we've got ISM manufacturing employment, we've got ISM manufacturing PMIs, and then we've got manufacturing prices. Chances are very high these fundamentals are going to be negative, you see. That's for Monday, but that's the focus that you should have, you see. That's what you should anticipate. Then You see, FOMC member William is going to speak. That's on Tuesday already, 9:20. Tuesday 9:20. And then Wednesday, you see, we've got service PMIs. You see, non-manufacturing PMIs. We've got crude oil inventories, right? You anticipate these fundamentals to put pressure on dollar. The underlying US economy is not really doing so well, so anticipate negative fundamentals. If it happens that the fundamental comes out positive, then you move on. You see, you move on, because that positive fundamental is definitely going to fulfill dollar index trading into fair value, right? Trading into fair value, thereby providing you now with a proper trade setup for a shorting opportunity, right? So yeah, that's pretty much. You can see the treasury yields, 3 of them, they're all confirming weakness. Even if we had to look at the weekly chart, you see, those are bearish 30-year yields, bearish 10-year yields, bearish 5-year yields. That's on the weekly chart. Then you ask yourself, where is this weekly candle on dollar index going? Redistribution into fair value for a push to the downside. So yeah, that's pretty much about it in regards to dollar index. And there's one asset which I just want to browse through quickly with you guys, and that's Brent. Shorting opportunities ideal from fair value. Remember, we have already taken this big candle February 21st. I think it was 2 weeks ago. That was a nice trade from premium, right? The daily bearish order block, right? So we now have also this guy here. That's our daily bearish order block. The imbalance is almost filled. You see, the imbalance has been filled. So you're looking for the precious liquid to trade into premium before a push to the downside, heading towards $71 a barrel, and ultimately we're talking of $65 a barrel on somewhere around 68. Let me go to the monthly quickly. Yeah, we're talking of $65 a barrel. That's like the target for Brent in the coming March and second quarter. But on the daily time frame, take note of this premium area here on the daily chart. If we ever traded back to $74.20 per barrel, thereabouts, give or take, then we should see further prices to the downside. You see that imbalance there? We've got a bearish order block there. Even though there's this bearish candle here, the fact that we had market showing us its intended pricing model here, this is all redistribution, guys. And this redistribution, you need it to trade into fair value. Once it trades into fair value, then ideal scenario for you to what? To short the market. This is last week's position, trading back into fair value. You see this level here, this daily bullish order block which was traded. There's a breaker here. You see the trade from 2 weeks ago that we took, that's a breaker, bearish breaker, retracement into fair value to a level that was broken to the downside, and then another push lower. So take note, Brent, ideally we're also looking for shorting opportunities on Brent, preferably if we get a run-off stop above this high here, right? If we have market trade above this high, close below, then you are shorting the precious liquid, right? So that's pretty much in regards to what I wanted to share with you guys. And I'm not going to speak about gold at this moment in time. That thing is in a parabolica. Long opportunities from discount are ideal. So your homework is to go on the precious metal. You define your discount areas on a higher time frame. Ideally on a higher time frame, say on the daily time frame or H4 time frame. You see, ultimately, no, this thing is in a parabolic. You have to be careful how you trade gold. So yeah, that's pretty much about it for today, guys. And if you have any questions, you know where to find me. Just send a message on the group, guys, and I'll gladly attend to your question. And if you haven't subscribed and you are in the mentorship group, there's nothing wrong with you subscribing, so that you get a notification each and every time I upload a mentorship video. If you are watching this and you are not in the mentorship or a member of the group, just click the subscribe button and support the channel, guys. It only helps us to grow further and attract more like-minded people into the group. So yeah, I wish you nothing but the best in your trading, guys, and good luck. Thank you.